Hello, everybody. Welcome to another episode of the Scaling Alpha podcast. Today, I'm joined by Patrick Feely, founder and chief investment officer of Sargasso Capital Management. Patrick has built a career at the intersection of corporate stewardship, operational scale, and public equity research, having previously directed governance and technology initiatives at Royvant Sciences and served as chief of staff at Strive Asset Management and later as chief of staff for Vivek Ramaswamy's presidential campaign. Today, we're going to dive into the core mechanics of corporate execution, corporate governance, and the analytical frameworks he uses to parse the small and mid-cap equity space. Patrick, it's great to have you on the podcast. Really appreciate you being here.
Thank you, Ben. I'm very excited for our discussion.
Well, why don't we start? Why don't you tell us a little bit about your background, where you went to school, and kind of the first couple places where you worked, and we can go from there.
Absolutely. So my name's Patrick Feely. I graduated from Yale College. I studied political science and I started working while I was in college, which was an interesting decision because I had plans to dual major in political science and econ. But once I started working, I figured I might as well. I don't know if I need to press myself on econ. So I started the first job that I had while I was in college was for a company called Legalist, which is a litigation finance company. It's actually, it's a very, very interesting niche world where civil cases can get, you can effectively invest and provide funding in civil cases. Typically what happens is, an employee has a lawsuit against a former employer. It looks like they're going to be able to collect $10 million. What Legalist does is they will offer upfront funding for, let's say, half,
For the lawsuit.
and then they will take the case off their hands and hopefully be able to collect on the rest. Legalist is extremely interesting in terms of it was founded by two Harvard dropouts, and they took an algorithmic approach to scraping Pacer to find certain cases that fit within their preferred window. And which was most interesting from that is I believe they have recorded over 10% IRR since inception, and it is one of the more high performing, I would say, private assets out there. And they've done an excellent job. And it was a fascinating experience getting to work with lawyers and kind of looking into how this all got created. Litigation funding was actually illegal until the 1990s, until a law changed because it was looked at as loan sharking back in kind of the mafia era. So it was funny to see how it went from there to then, having two former Harvard dropout students create an exceptional company. It's a very small company out in San Francisco, and it's done extremely well. I believe well over $1 billion AUM. And I was in there during the early stage. And after that, I had a contrarian approach to what I wanted to do after I graduated Yale. I had 0.0 interest in investment banking or consulting. And because of that, I ended up working for a small startup out in Ohio, in Columbus, Ohio, that was founded by Vivek Ramaswamy, who everyone knows to this day for many different hats. But when I met him, he was a former founder of Royvant, his biotech company, which today is over $25 billion market cap, hugely successful biotech company. And he decided to start a company called Strive. My joke is I joined Strive, and I think about 3 weeks later, Vivek asked me to be his chief of staff at Strive, to which I responded saying, what is a chief of staff? And he was basically, sorry, go ahead.
No, sorry for interrupting, but what did he see in you? What qualities in you that made him realize that you would be good in that role?
I think a few. Our first instance was we were launching our first ETF fund, which was an energy sector ETF fund. And we were looking for ultra high net worth people who would be aligned with what Strive's ethos was. And I, within my first few weeks, realized that this lane of the ultra high net worth is something we should double down on, and is something that is lacking in terms of I was looking at a list of 40 names, and I was like, okay, we can definitely come up with 500 plus probably conservative Americans that would help launch this fund. And so that's what he agreed with me, and that's what we did. So what he saw, I think, in me was a little bit of a realist analytical approach towards how we could launch this ETF, as well as, I was young and early in my career, and working 100 hours a week was something I was willing to do. And I think that also was something that he definitely appreciated.
Was part of that just my interpretation of what you said? I could be wrong. was a certain go-getiveness, like, hey,
Absolutely.
this is how it's him not feeding you. This is how we're going to go raise money for this. You coming up with, hey, this is how we should do it.
Yeah. And I think any young professional out there, your direct report or whoever your boss is actually will appreciate if you kindly. I wasn't saying, "Hey, you moron," we should be.
Hmm.
I said, "Hey, here's what I think." I think, I also prior to going to Yale, I had grown up in Greenwich, Connecticut, so I think I probably understood a little bit of what this high net worth bucket looked like just from being around that kind of on the outside bubble of that world. And also, I realized that this was a very different approach in May of 2022. I said we should get on a plane and we should go and visit all these people. We're not going to be able to get them interested. And I saw the talent that Vivek had. He's a very charismatic person. When you get him into a room for a pitch meeting, and he just has, I would say, maybe as young kids would say it, but an aura about him that
Hmm.
is attractive. And so I was like, we should be flying to Dallas, Texas. We should be flying to Miami, Florida. We should be flying to Tennessee. We should be flying all over the country and go and try to do this. And
Hmm.
luckily for me, it was extremely successful. The fund had over $100 million in the first few days of trading, and was the fastest, non JP Morgan, non BlackRock
BlackRock.
funded ETF. And, Strive progressed over $1 billion in AUM within the first year, just in their index funds. And I think that he saw very much a go-getiveness and a little bit of a contrarian idea. I think he thought that earned media was going to get people to invest into the funds, and in terms of going on TV all the time. And I was like, no, I think it's going to be going to the family offices and visiting them, and it's not going to be getting on TV necessarily. That's how I think we can capitalize and get early AUM in. And I think, to Vivek's credit too, he was a former biotech founder. He understood phase 1, phase 2, phase 3 trials. None of us knew how to really the correct approach to creating a successful index fund launch. And I think because of that, the best ideas rose to the top, and then we went with them.
Hmm.
But yeah.
What are some of the biggest lessons you learned as chief of staff of Strive Asset Management that you've taken with you to what you're doing now?
I think one of them is having the irrational view that every single day is existential. I think in an early stage fund or an early stage startup, you really need to try to be holding yourself to high benchmarks of output that you're doing every day. I think sometimes, especially in the hedge fund world, you can get lost in doing the largest deep dive on research that anyone's ever seen. I think I've been at fault of doing that since I released a
Hmm.
120-page paper to launch my own company. But I think that you need to move quickly. You obviously need to move correctly, but I think just the high level of intensity in thinking that, if we don't attend that conference, or if we don't have 15 meetings in the first half of the week, then that's not a success. I think that a high level of being extremely intense in the early days, in my experience, having now seen lots of companies launch around me, that's a major driver of success. And I think that my approach is that for an emerging manager, it should be no different.
So while at Strive,
Yes.
my understanding is there was a heavy focus on looking at companies from the perspective of a corporate governance,
Yes.
board structure perspective.
Absolutely.
Expand on that, because I know that's something very important that you're still using in
Absolutely.
your approach today.
I think that the first item is the who is on the board is extremely important. I think that is just an underlying basic approach that most investors probably don't appreciate as much, especially more passive investors. But one example of that is Strive had I would call an engagement with Exxon and Chevron around their Scope 3 emission cap reporting. And this was the push from various minority shareholders that they should be adopting not just their own emissions, they should be adopting the emissions for the Amazon delivery truck that shows up to another company's, to, the mom and pop shop in town, because that is the oil and gas in their car, and they should be responsible for that.
Yeah, that's scope 3 for you.
Exactly. It's an interesting argument, but I think to what we said, and to what Vivek led the charge on, and I'll tell you the ticker of the first ETF, but it was DRLL, Trill, and it was an energy sector ETF. What Strive was pushing for is that if you're an oil and gas company, you should be the most excellent oil and gas company, providing the most excellent services to your customers, period.
Mm-hmm.
And I think, or I know what we saw is some of these companies adjusted their boards to represent people that, let's say, had more of a environmental focus than an oil and gas background. And so what Strive pushed for and was successful with Exxon is for a replacement of 3 directors, and they were able to get more oil and gas type people onto the board to replace some people that I personally think were interested in environmental causes, which I am very supportive of someone being interested in environmental causes. There are lots and lots of nonprofits out there that do an excellent job supporting nonprofits. I do not think that Chevron has to, change what they are doing from a day to day just to appease a very minority shareholders. And I think you can see with Strive's success is the large shareholders agree. You're not able to actually change board directors if you don't have support from the larger shareholders.
Mm-hmm.
And I think that that's also a very clear example of how any type of actively managed investment actually works. Is I think a lot of these large institutional shareholders will go with the best argument. They need something put in front of them, though. If there wasn't a Strive, nothing would have changed. There would have been no critique on ESG. And I think that's one thing that I'm probably proud of during my time. Maybe sometimes I didn't necessarily agree with everything that my boss was saying or that my company is doing, but that's, first of all, that's working at any business. If someone can find me a company where they agree with 100% of everything that's ever done at the company, then I'll probably, recommend that you take a sabbatical and get back to reality, because it's not realistic. But at the same time, if there was not a Strive during the years of 2022, 2023, then there wouldn't have been a critique on ESG. And I think because of that, that's how Strive was able to IPO last year. And, it's a very different business to what it was earlier, but the reason it was quite a successful startup was a lot because of right timing, being in the right argument. And I think that's something I continue to this day around my opinions towards AI adoption and the mid caps. But it's right time and right place. I mean, I don't know who says that, but I think that's like what luck is. So Strive was, very, very.
They made their own luck. They made their own luck, right?
Absolutely, and they chased a wave too.
Yeah, I think looking at that Exxon situation, there's kind of 2 things going on. One's political, which we could put aside for the sake of this podcast.
Yeah.
The other
I'll come on another time we can have one of those discussions if you want.
As you know, I ran an ESG data company, so
You're right.
I'm very familiar with this topic. But I'm also steeped in governance and having sold proxy data as part of our offerings at that ESG data company. So a lot of data we would sell that the market was interested in from a perspective of proxy was management incentives, board oversight of those incentives, all that type of stuff. And really what you were doing with the Exxon situation, which is making sure it seemed, this is the way I'm gonna encapsulate it, is making sure that you had board members that were aligned with the goal of maximizing revenues and profits, right, of the company as the primary driver of KPI that the company was operating towards.
Yes.
Right?
I think we were all a group of Milton Friedman supporters that were running around Columbus, Ohio. And yes, I will say where probably differs maybe from some of the historic active type managers is we did have long-term thinking. In our long-term thinking at Strive was, hey, this ESG craze is not going to continue. There is going to be a change because I think from the first standpoint of ESG funds, we're just the return on them were not superior. So there's going to be a change. And I think tying incentives, whether it's board incentives or individual employee incentives to what your business is doing is highly important. And is highly interesting. I mean, one tiny standpoint is I'm extremely fortunate, having been a former employee of Royvant. They created an employee incentive program where I put 15% of my paycheck into discounted stock. And when I did that for over a year, that the market cap of the company went from 6 billion to 25 billion. That is directly tying my incentives day to day into how can we achieve the price. And I will say I was able to work kind of as the right hand for a few months of Royvant CEO, who's the smartest human I've ever met. I've told Vivek that too. But Matt Glein is the smartest.
Vivek is number 2, right?
For sure. He's up there. But no, Matt Glein is the smartest, the best steward over a company I have ever seen. Extremely, and he's very humble and he's very hidden. People don't really, I think, know about him like they should. And him creating that incentive program, and day to day, we were where's the stock? And you'd be thinking, okay, we're a biotech company. It's either going to, when we have results, it's either going to go up or down. But no, that's not. If you're operating like that as a company, then when there is a result to capitalize on, or to the opposite, when there's bad news, you don't want massive variation in the stock. And I think that is what companies, how they should operate. I think everyone should know what the stock price is, what the market cap is, what is our goal. And I think when Chevron and Exxon were seeing negative ramifications on their stock and their market cap because of a lot of these scope 3 type deals they were getting involved in, they should have proactively been doing that. They shouldn't have had to need Strive. Well, in what I've learned now is it's actually kind of good sometimes to have a company like Strive because it can take the heat off the management committee. But we were steeped in understanding the payment structure too. I mean, it's one thing I look at day to day is how's the CEO getting paid? Super important. People should be looking at that. CEOs like to make money. They should like to make money. How are they getting paid? And during that time of 2022, as you know, actually, there were a lot of companies out there where they were getting their bonus structure was tied to how their ESG criteria was hit. It was very interesting, and I'm sure it exists to this day.
Yeah,
but
it does exist. I know this firsthand, but things are changing.
Yeah.
But what I would say, you hit on something else, right? There's board oversight of management, having the board aligned on very clear KPIs and goals that they want the management to focus on. But then next is incenting management, CEO in particular, but management to also benefit for achieving those goals. So tell me, and definitely you've kind of innovated. You wrote this 120-page paper to help start your firm. So bridge the gap between Strive, being the chief of staff of Vivek for his presidential campaign, and that decision point where you were like, I'm going to start my own firm, and this is what I'm going to build it around.
Yeah. I think one thing I will touch on, which Ben, I think you'll find interesting, is I'm sure, as you can imagine, there were a million micro situations that made me get to the decision that I wanted to jump off and make this leap. One clear example is when I was chief of staff at Strive to Vivek, him and I were actually leaving Dallas, Texas. We had just come from a meeting with the CEO of Exxon, Darren Wood. Amazing guy. Also, I will say Exxon's corporate campus is one of the prettiest I've ever seen. But anyways, we were just leaving an engagement, and there was something mulling inside of me leading up to that port of thinking, hey, we have a $200 million ETF. Why are we meeting with the CEO? Like, it's just, you scratch your head a little bit. It's like, you think about it, we're divided up between Chevron, Exxon, ConocoPhillips, et cetera. We probably owned like $10 million worth of Exxon stock, and we're meeting with the CEO.
But that's a drop in the bucket for Exxon, right? And that's kind of what's going through your mind. Yep.
Exactly. Why are they meeting with us? And clearly, it's extremely important. That's probably the first meeting. It is what we are saying with our conviction. It warrants a meeting with the CEO. And I think Ben, I think you'll probably find this because it will tie into my next point. But the way we went about it in terms of being on CNBC Squawk Box whenever they'd have us, being on any podcast that would have us, writing as many Wall Street Journal op-eds as we possibly could write. They clearly saw that from a media standpoint, which I think is really changing the game in activism right now. They could have a big problem if they don't properly engage with Strive. But anyways, we were leaving that meeting, and we were actually flying to London, where Vivek was chairman of the board for his former company, Royvant. And this was actually his last board meeting he ever attended. And him and I were going out there. And funny enough, I watched the HBO series on Carl Icahn on the flight out.
Mm-hmm.
And I was watching it, and I basically, all in London, was like, hey, we're doing this wrong.
Mm-hmm.
We should have a private fund where we should do this type of engagement, but take the $200 million and just put that into Exxon, and we'd be able to collect, good fees on that. And if we're seeing the results that we're doing right now, long term, this could be unbelievable. And Vivek didn't tell me at the time he had grander plans. There's a reason that he wanted to be more of a passive, not a typical activist. And I think what I'm getting at there is, there can be kind of some reputational harm if you might want to run for office at some point
Exactly.
there's probably a reason that Bill Ackman or Carl Icahn or Dan Loeb or Adam Katz haven't decided that they want to run for office. Unfortunately, there's some baggage that comes with what they do. So Vivek said, no, not the time. But obviously I was like, okay, well, I've kind of got the strategy. I've got the playbook on how you could get this type of engagement to meet with a CEO and be able okay, well, I kind of set that to aside. And then I think over the next 2 years, one thing that my former boss did is announce that he was running for office for president of the United States. And I think you'll find this interesting because when you're talking about proxy data, major learning I had during that experience was how do you touch, in terms of touch from a media standpoint, individual people? That was one of the projects that I own. And, how are we able to get onto the center of the debate stage? Where do those surveys take place? How are we able to reach individual voters for the cheapest amount of money? So during that time, I was like, a lot of what I'm learning right now from a digital standpoint would be extremely useful during a proxy campaign, if that ever were to happen. But it was more larger of how am I understanding all of the standpoints of active investing? Because I think, Ben, as you know, there are activist investors out there that are probably more quants. And then there are some that have probably more of a personality and are thinking of proxy wars and what are the proxy contests? What do those look like? How do those operate? How can I maximize my value? And I think during that time, I just really was still thinking back. And then ultimately, my most recent time working for Royvant, which is a fascinating governance structure. It's a parent company that creates individual companies, as we call them, Vants, around certain indications. So dermatology, Dermavant. We have Immunovant, Immunology, FCRN franchise right now. It was a very interesting structure. And the idea there is, big pharma can't properly develop all these different indications. We should create individual companies that you are highly incentivized as being an employee of that company to be able to get that drug approved. And I think my time at Royvant and really ingrained in understanding the governance of how does this company work, how does it work with its subsidiaries, et cetera, I think gave me an opinion and a feeling that I have had such a unique last couple of years since graduating college. And that this has always been my passion and interest. And that's ultimately what led me to, I think, seeing what everyone is seeing right now, where there is a massive disconnect between what AI tools and what AI are available to mid-cap companies and how they're actually utilizing them. And how a lot of CEOs currently are doing PR announcements saying, hey, we've created this new pilot. Okay, great. How much money did you invest in this? What is the return on investment here? Royvant is named return on investment. So that is a major part of my thinking. ROI, like what are you spending and getting and what is your output? Okay, great. You've adopted all these AI programs, but your headcount's gone up 50% and you're spending out the wazoo. I love all these PR statements as the casual investor will, but what are you actually doing to improve your core business from this amazing technology? And I think what we're seeing right now is no one has any clue. I think it's funny. I was thinking about this earlier today, Ben. It's some people treat a mid-cap company will treat their AI program like they're Oppenheimer in the Manhattan Project. And you're like, okay, fair. Yeah, there needs to be some level of secrecy. You want to have a competitive advantage. Okay. But now what we're seeing is no. The reason there's secrecy is no one really understands how to apply this HR tool, or there's just too much out there. And the idea that Sargasso is built on is where can we invest in a company and engage a company, and I think bring some of the tools that I have available to myself, into which I have board members and close friends that work for companies like OpenAI, or are investors in OpenAI and Anthropic. So how could I take that unique relationship, go to a $700 million company and create a data licensing partnership because they have great consumer data, but they have no idea how to monetize it. And if I can bring that to the table, then I hope that the ultimate return on investment and that shareholders will be happy about it. And I think that's too then where I come from, more of the constructivist lens in trying to find opportunities where I can work with companies. And I think that's similar to what Strive was doing at Exxon. It wasn't, Strive at Exxon was not trying to, just be a thorn in the side. They were trying to think through, how can we take the shrapnel and you make these adjustments? Well, similarly, if I can do that and help guiding some mid-cap stocks on the right AI programs, then ultimately, my LPs and the shareholders of the companies that we decide to invest in will be very excited.
So taking a step back, I think I got a lot of that because I've done my research on pilot purgatory, on Sargasso, and your approach. So let's focus on that aha moment where you wrote this 120-page white paper on pilot purgatory. What is pilot purgatory, and how does that work into the very DNA of what Sargasso does?
Yeah. So Pilot Purgatory is my probably provocative title of my white paper, which the underlying thesis is that there is a large AI gap between mid-cap companies and what they are reporting, and then what is ultimately happening with their AI programs. And from that just basic lens, I have created my own screener, as I'll say. I wouldn't go as far to say it's like a proprietary technology or anything like that, but a screener where I am looking at companies between $300 million and $1 billion market cap. I am looking at ideally companies with not a lot of debt. I am looking at companies that are releasing press releases around AI. And I am tracking those companies to see, okay, well, they said, or I'm also comparing too. So for an example, Burger King, they're actually doing quite an excellent job as a company with their AI program. They've installed AI into the headsets of drive-thrus. They are tracking that data, and they're trying to basically understand when a customer pulls up in this certain car and speaks and says these words to my employee, what are they going to order? And because of that, obviously, they can do a better job with making sure that their stockpile of burgers and fries is economically intelligent. So because of that, I have in my paper recommended that Dine, which owns IHOP and Applebee's, they should be considering that. And so what I did throughout the paper is I took a company like Dine, and from all publicly available sources, and they don't have a chief technology officer. No one on the board has experience with AI. And I think that because of that, if they don't adapt to the time that they're in right now, then I think in 5 years, it's going to be a grim story. We are going through a .com bubble of you could list the thousands of companies that didn't really make it from 1995 to 2005. And we're seeing that. I think we're at the early stages of that right now, but we're going to see it. And I think that being an active investor coming in with a toolkit, you can create unique opportunities and hopefully avoid that type of circumstance. So in my paper, I walk through these examples, whether it's Dine, Snapchat's a great example of it. Snapchat has spent, I think, $3.5 billion on their Specs hardware, which seems to be a complete pet project of the founder and CEO who has a dual class structure. And meanwhile, Meta, on the other hand, abandoned their whole metaverse type program, and they've really focused on what's the daily active user revenue that we're getting. And because of that, I think Snapchat gets $2 per daily active user. and Meta gets 10 or more. So I think that there's also those types of circumstances where, okay, yeah, I understand you're trying to use AI and apply it to a hardware tool. We'd rather have you get as much out of your user base that exists. And so my paper draws on a lot of these examples that
Is
I
it
just
is it
listed.
really trying to align, like going back to like the incentives of the company? What are the KPIs of the company, right?
Yeah.
That drive value, right? Drive, growth, right? And then seeing if these pilot programs are directly accretive, or
Yes.
one, are they successful, and are they directly aligned with driving those outcomes?
Well,
So
I think
it,
there are two things too. One is public investors do not know the answer to that.
Mhm.
I think that's one standpoint where, and that's where I call it pilot purgatory. Is the pilot started and then it goes to purgatory. There's no idea what's going on. We don't know how much was spent. It's just grouped into the general expenses that of technology or software or however way that the proper accounting allows for it. But yeah, to your point is we sometimes don't know.
And so how do you then, so are you then looking, because I know you're an activist, to find companies that
So
have pilots that are, and somehow you're measuring that those pilots are successful
yeah, that
and are
absolutely.
accretive?
Yes.
Got it.
Yes. And then as well as where we have a situation where a pilot was announced in, September of 2025 and we haven't heard anything from there. The activist, my angle there is just asking questions. Well, where is it? And trying to get some level of engagement, because if we don't know it, and I think my hunch typically is if you have to ask a question there, the answer is probably bad and they probably
Hmm.
don't want to report what happened. But if we don't know and there has been increased revenue per daily user because of the program that they created, fantastic. Then you should do a better job of making that known.
Yep. Do you look at situations where you mentioned where people at OpenAI, you have
Yes.
investors and colleagues, et cetera, at Anthropic, whatever
Yep.
expert connections you have, and you take that activism concept and, hey, I can help you, set up alignment. I can
Yeah.
help
Yeah.
bring
Yeah.
experts into the company to help you achieve your pilot goals. Is that something you do as well?
Yeah, I will absolutely. That's probably what I'm more passionate about, if that makes sense. However, it's more of a rare opportunity where you get to bring in the toolkit. But what I will say without mentioning the company is OpenAI, and I'm sure everyone who's listening to this who uses it, they're trying to create a shop. They are very geared towards advertising. If you say, "Hey, which toothbrush is better?" you're going to get an ad at the end of that discussion for whatever toothbrush on Amazon shop. They've been very open. They're trying to create a shop. What they don't have is data. I know of a publicly traded company above $500 million, zero debt, good EBITDA, et cetera, right in the strike zone, that has fantastic data on their users, but they've never thought about commercializing it because they didn't know it was an option. Reddit now has an additional $200 million in revenue that they have from their relationship with Anthropic, OpenAI, and some other of Reddit's done it. There are some other companies. This is a brand new thing. This is a brand new
Yep.
concept. The idea of having a partnership where you maybe have like a home goods type company out there that is partnering with OpenAI. Like you'd never think how can that happen? It's almost like when and then a lot of it's built on what you're seeing right now in private equity, where you're seeing these deals between Warburg Pincus or whomever and creating some sort of AI native accounting portfolio where they're going to go and buy up accounting shops throughout the US and then have an underlying same technology. It's very similar to what's being done quickly on the private side. In the public side, because of regulatory reasons, et cetera, it's a lot slower moving. And I think where I like to get involved is where I can bring my experience of connecting large companies to each other quickly. And that's
Yep.
what
And
OpenAI is nowadays too.
it makes a lot of sense. I mean, we are in probably one of the biggest kind of paradigm changes in the history of humanity right now.
Yeah.
And while AI isn't perfect, if
No,
you're not looking at how it can fundamentally improve how you do things, then you are blind to what's happening in the world,
exactly.
and
And
you're
I
going to be
think
left. left
Ben,
behind.
that's a point that like I love, where Royvant doesn't have a robust AI program that they're using core to their company. However, because in creating and developing new medicines where you're on phase 1, phase 2, phase 3 trial and hopefully getting approval, it's a very different world. However, companies like Royvant should be looking on, okay, well, how can they save money on the HR side? How can they save money on the accounting side? How can they save money in other parts of the business that is not necessarily core, but can use
Mhm.
this technology out there? Because I think I mean, to be honest, for any companies that are not doing that, I ingrain myself in fiduciary duty. I think that you're failing on your fiduciary duty to your shareholders by not realizing that there's this technology out there that is fantastic and understanding how can it work for you. And it can work for every
Yep.
single company. It's going to take different shapes and forms. It didn't. I'm not saying that not saying that, for example, Dine, which has IHOP and Applebee's, I'm not saying that they need to replace all their employees with robots. Like,
Yeah.
no,
Yeah. Yeah. Yeah.
but if they could
Yeah.
cut down on some of their admin expenses because of some of the
Or
tools that are
or
out there.
or use AI to analyze all the
Yeah,
food,
exactly.
all the menu items everyone is ordering, so they can
And
optimize
should they be changing prices?
their
Yeah.
inventory, or optimize their inventory. Like, hey, I don't we maybe shouldn't have 500 pounds of beef
Right.
in the freezer, right? Well,
Yes,
there
exactly. Or
exactly. So there's
should they have more
go ahead.
fluid pricing on the menu? Should, if tariffs hit and gas spikes because of a war and costs are just up across the board, maybe they should maybe they should adjust having a $2 appetizer to a $5 appetizer just for the time being, and looking into those details too of if they do decide to do that, or they're losing a customer because of that, and having some way to track all of that. I mean, that all exists
Yep.
right now. This is not
Hmm.
and that's, I think, I'm sure you can understand when I'm looking into a company is whenever I see some level of proactiveness, that just immediately gets me at ease, maybe, or
Yeah.
excited. I think there's one level of ignoring it. There's another level of just completely changing your business to try to work for AI, which I don't think is successful either.
Yeah.
Yeah, I don't think if you're, let's say, if you're a accounting firm that has 50 employees in New Hampshire, I don't think you should just fire everyone and outsource it or whatever. That's not what I'm talking about. I think too,
You actually use AI, so those 50 accounting
you can
employees
have a better
can do
input.
twice as much work. Twice as much
Yes.
work. Now, being an Ravella is very steeped in AI, which we won't go into too much here. But you using AI, actually building real world production grade AI for very specific outcomes is easier said than done. We went through a phase when AI ChatGPT and OpenAI was introduced to the world, where everyone thought AI was magic, right?
Yeah.
And then everyone started realizing, no, there's a lot of flaws, there's a lot of holes. Then even recently, earlier in
Yeah.
this year, we went through a phase where, hey, let's build agents to do everything for us. They're going to magically replace everything. And within a few months, everyone realized, no, that's not true. You actually have to look at your goals and objectives, how you do things, how you can make them more efficient, how you can do better, and actually build appropriately, right?
Yes.
So with that in mind, how is AI changing how you conduct investment research, and how do you think it may change how fundamental? I mean, there's all sorts of buckets of different types of investors, but let's just talk about fundamental bottoms up investors. How do you think AI is changing what you do, and also that bucket as a whole?
I think I'll probably be the first hedge fund CIO out there to say that I probably spend over 50% of my day discussing with Claude.
Hmm.
I don't think there's very many people saying that. I know it's happening because I talk to these people and I know that they are doing it. It's just no one's publicly. So I am trying to use Claude, for example, or Gemini, or I use them all and I like to compare them. And then I think that's one way I'm able to get out of the loop of, it telling me that I'm right.
Hmm.
And I think that is one of the big fears as investors is, yeah, right now I could type in, why is Facebook the best investment of all time? And then and it will create a story for me of that right now, Facebook is the best investment of all time.
Here's why.
Yeah. Exactly. So I think by the one way I avoid that is I have a strict criteria. I'm looking at $300 million to $1 billion market cap. I'm looking for, companies that have a diverse shareholder base so that there isn't a majority shareholder, for example, that has all the control. I am looking for not a lot of debt because my standpoint is if they do have a lot of debt, it's going to be even that much harder to be able to invest into various tools that we just discussed earlier.
Mm-hmm.
So I think by doing that, I cast a wide net.
Mm-hmm.
I will say that I also have gotten into the agents in terms of tracking.
Mm-hmm.
But I'd say the one thing that I do that I think is unique to this time as an investor is that we have so much information of what's happened in the past 5 years on said company. More information that is than is useful. I think it is unique in this mid cap world in terms of no document at NVIDIA that got posted or a comment made at a conference or something said on a transcript would ever not be noticed. However, in the mid cap world, that happens all the time. There's information buried, but what I'm looking for is to the future and where is the language on the earnings changed over the last 2 years, especially built around if there is an AI implementation they're trying to do. But where is this company varied? Look, I think one good thing is once you find an interesting target, looking into the competitors of, okay, did they recently replace a CEO? What does that matter? What does the board structure look like? You're
Mm-hmm.
able to have so much information, but I think you need to get good at drawing a line, and then you need
Mm-hmm.
to immediately be pivoting to the future. And
Mm-hmm.
I think that's one thing that I will say is unique. I think, I just candidly, I thought about bringing on an analyst early on or having an intern, and I came to the conclusion that I don't really necessarily know if that's the right decision for me to spend my time coaching and
Mm-hmm.
mentoring, unfortunately, at this standpoint, just because of how good these tools are. And that's also
Mm-hmm.
a good learning experience for when I'm looking at a company and understanding the hiring process. When people are saying it's really hard to get jobs, I'm kind of like, yeah, I'm a part of that problem now. But it's one thing that, I see and I think about, but uh, I think of that is where I think the look forward is the mechanism right now that people are not doing enough of
Yep.
how can you take the information from the last few years, synthesize it and draw out conclude. And that's what I'm doing daily. And that's what I'm tracking my metrics to say, am I right?
Mm-hmm.
And that's what
Mm-hmm.
I'm holding my KPIs for. And then if I'm wrong, incre- you know, then I'm adjusting and I'm trying to get better every single day
Mm-hmm.
of understanding
Yep.
how can I look forward and make sure that I am correct. And I think too, one thing that's just fascinating is like you can find so much information around every single type of activist or constructivist engagement that's happened over the last few years. And so whenever I'm thinking of a company or I can just immediately find a similar example very quickly. And then what I can
Mm-hmm.
do is I can go and call the PM or whoever was involved there and say, hey, what happened there?
Yeah.
Like, did it go
Mm-hmm.
well?
Yep.
And I think that's fairly unique. So I do
And
think
I'm
it's
and I'm imagining you're monitoring those sources through AI in some way, shape, or
yes,
form.
yes,
Yeah, that makes a lot of
absolutely.
sense. That makes a lot of sense. And I think the hiring an analyst, it makes sense at a certain stage, right? Where like alpha is really about really breadth and depth, right? So
Yes.
the more breadth you can research and the more, to find more opportunities and read more research source information sources that you may miss because you didn't have the time versus the depth of your research, right? At a certain
I'll be
point,
bringing on
ups,
a few, but
yeah,
I
yeah,
by this time next year,
yep,
Sargasso will have at least 10 people total. So I'm bringing on people soon. And because I have reached that point where I need to be diving
yeah.
deeper. But
Mm-hmm.
you are very correct. But I think it's interesting the period I've just went through where you basically, I think, can get an activist or a long
Mm-hmm.
short fund or whatever. But I think you can get it up and running quite quickly nowadays because of AI.
Yeah, and
Then you hit the
but I
limit.
also, yes, but I also think like for you, it's like about refining what you were doing,
Exactly.
how you were doing it. Now you can scale and you could teach that to the other people easily. If as you're finding your way, it didn't make sense to bring other people on, and it's important. it's kind of think of it from you're a technology startup,
Yeah,
right?
exactly. No,
Do you
I
want to scale?
all the time.
Do you want to scale? Do you want to scale up before you know you got the right product?
Right.
No.
No,
You want to
absolutely.
yep, and that's kind of, it sounds like you used AI to help you find what you're doing. Not that it wasn't by itself, but helped you. You knew what you wanted to do. Now you're using AI to help achieve it and execute it and prove to yourself, hey, it's working, right?
Yes,
Now you scale up. Am I right?
absolutely. And I think if this was 2016, it'd be it wouldn't be achievable.
Yep. But now you're able to achieve it. It's interesting. I would love to, as you grow, I'd love to bring you back.
Absolutely.
Look
Yeah.
to hear more about the lessons you're learning as you build your
I tell
fund.
investors all the time that I talk 40 years down the line of what Sargasso looks like, and so often people chuckle, and then they're like, "You're serious?" And I'm like, "Oh yeah, like that is my goal. I hope that." And I do think from a technology standpoint, what has been created, and I'm very very fortunate to have gone to a great school where I have friends that are excellent coders that will lend their time to me just out of just because of that. But I do think that what I have under my belt is, something I'm very proud of, and I hope to show everyone too.
Yeah.
I'm
Well,
also, I think that there is worlds where you sell the technology arm of your company to other funds and things like that. It's exciting. It's very different.
where would people find your white paper? How could they find it?
Pilotpurgatory.ai.
All right.
It's also on my firm's website, sargassocap.com.
SARGASSO cap.
Yep.
.com. Awesome. Fantastic. It was a huge pleasure having you here today. I'm really excited for the future ahead of you, and I would very much love to keep in touch.
Absolutely. Thank you, Ben. And I'm very excited to keep listening to all your future episodes because all the ones previous to me have been excellent.
Well, thank you so much. And everybody, viewers, really appreciate you joining us for another episode of the Scaling Alpha podcast. Hope to catch you on the next one. Thank you.